Good morning. I'm Doug Krisner. Here are the stories we're following today. This from the Bloomberg terminal. TikTok is aiming to grow the size of its U.S. e-commerce business tenfold. We are told total merchandise value could rise to as much as $17.5 billion this year, and obviously that would pose a bigger threat to Amazon. Let's take a look now at the minutes from the last Fed meeting. They seem to indicate officials agreed it would be appropriate to maintain a restrictive stance on interest rates for some time. Last month, Fed officials also viewed the policy rate either at or near its peak, at least for this tightening cycle, and officials pretty optimistic about the path of inflation. They noted clear progress. We got reaction to the Fed minutes from Ed Yardeni. He is president of Yardeni Research.
I think they're going to be very data dependent, as they always are. And if the economy continues to do well, especially with the drop in long-term rates, mortgage rates have come down. That should give us some boost to housing activity and housing-related retail sales. So it looks to me as though there's no recession in sight. The economy is doing fine. Inflation's coming down. What's the rush to lower interest rates if the economy is demonstrating it can live with these kind of levels?
That is Ed Yardeni there. Now, the December minutes gave no indication of easing as soon as March, and that's something that the futures market has been expecting. By the way, the next FOMC meeting later at the month, January 30th and the 31st. Paul?
Walt Disney CEO Bob Iger's lining up allies as he looks to stave off pressure from billionaire activist Nelson Peltz. We've got more from Bloomberg's Ed Ludlow.
Iger has the support of Value Act outright. Disney and Value Act put out a joint statement in which, Value Act basically said at a time where the big tech companies are coming for media companies, Disney is best placed to lead the industry. And, we don't know the size of Value Act's stake in Disney, but Bloomberg's reported that it is large and growing. Then you have Nelson Peltz. He wants to put himself on the board and address what he sees as overcompensation of Disney executives, misalignment of governance, but he's zeroed in on the kind of failures of the last 18 months, the sort of botching of succession. Bob Chapek didn't last very long.
Ed Ludlow there. At the same time, activist hedge fund Blackwell's Capital is proposing 3 nominees to the Disney board, and they would champion CEO Bob Iger's growth strategy and offer an alternative to Nelson Peltz's Trian Fund Management. Trian holds about $3 billion of Disney stock. That's about 1.8% of shares outstanding.
Well, the chairman of Morgan Stanley, James Gorman, is saying new banking rules proposed last year will certainly change. Now, these rules would require big banks to increase their capital cushion by nearly 20% as a way of ensuring they could or would survive another cash crunch. Here is Mr. Gorman speaking earlier with Bloomberg.
It was a proposal that I would say was extremely aggressive and set a marker. It will not go through in that form. If it did, I think it would have very, very negative consequences for corporate lending across this country, which is not what you want. It's not going to help the economy grow.
That is the chairman of Morgan Stanley, James Gorman. Now, bankers have been increasingly vocal in arguing against these new proposals. They have argued the rules will drive up interest rates for first-time home buyers as well as underserved and low to moderate income borrowers. Paul?
We're told that Barrick Gold has spoken with some major investors of First Quantum Minerals to gauge support for a potential takeover. We've got more from Bloomberg's Charlie Pallett.
Word comes after the sudden closure of First Quantum's flagship mine left the Canadian copper producer reeling and wiped out more than half its market value. Sources tell Bloomberg Barrick CEO Mark Bristow approached some of First Quantum's largest investors late last year. Gold giant Barrick has been seeking to expand in copper, and a deal with First Quantum would transform the company into one of the world's biggest producers. In New York, Charlie Pallett, Bloomberg Radio.
And we go to China next, where workers are suffering from the biggest drop in hiring salaries on record. That story from Bloomberg's Joanne Wong in Hong Kong.
Average salaries offered by companies to new hires in 38 key Chinese cities fell to about $1,450 last quarter. That's a drop of 1.3% from a year ago. That was also the worst decline since 2016, when data were first available on recruitment platform Zhaopin. The figures highlight the mounting deflation risks China faces going into 2024. A gloomy job market means residents could pare back their spending, adding to downward pressure on consumer prices. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
Let's get to global news next. So let's start with those attacks inside Iran and the U.S. saying it had nothing to do with them. Ed Baxter has global news from the Bloomberg Newsroom. Eddie?
Yeah, Douglas, and emphatically, too, says neither did Israel. Iran is characterizing them as terror attacks. More than 100 people killed. Iran says the attacks were carried out to push its stance against Israel. Now, the blast near the grave of Iranian commander Qasem Soleimani. U.S. State Department quick to respond. Spokesman Matthew Miller.
I do want to address some of the irresponsible claims that I have seen circulate and say that, number one, the United States was not involved in any way, and any suggestion to the contrary is ridiculous. And number two, we have no reason to believe that Israel was involved in this explosion.
Now, Miller says no one's interest to see the conflict escalate, and note it comes a day after an attack in Beirut that killed an Iran-backed Hamas militant leader. So Bloomberg National Security Team leader Nick Wadham says a definite worry for the United States.
I think very concerned. I mean, the big issue here, obviously, is the administration has said since the October 7th attack by Hamas, they do not want this conflict between Israel and Hamas to turn into a wider regional war. And whether that means Israel versus Hezbollah or Iran entering the conflict, whatever it is.
Yeah, Nick says U.S. wants it contained while Israel continues its campaign in Gaza. So who then responsible for the attack? Well, nobody's claimed responsibility. And a former director for Syria and Lebanon at the National Security Council, Hagar Shamali, says that the definite footprints of ISIS.
They attacked a Shiite shrine where 15 people were killed, and that's in addition to other attacks. And Al-Qaeda, by the way, still operates in Iran. And the attack that I saw today, it bears a lot of the markings of attacks pursued by ISIS.
Yeah, whom she says attacked before, one in 2020. And there are now 13 countries that have signed an agreement warning Houthis against attacks in the Red Sea. U.S. NSC spokesman John Kirby says 13 nations.
Countries are more and more becoming aware of this increasing threat to the free flow of commerce in the Red Sea by the Houthis, and are increasingly being willing to express their discomfort with that.
Yeah, and Singapore was not a part of the original group, but now has signed on. Donald Trump's attorneys have filed with the U.S. Supreme Court to keep his name on the Colorado ballot. Colorado Supreme Court had ruled that Trump was an insurrectionist and therefore ineligible to serve as president. Bloomberg's Gregory Corti says a legal issue as well as political.
Every time he gets indicted, every time one of these legal issues comes up, there's sort of a rally around Trump effect among Republicans, and we're going to have the first true test of that in just under 2 weeks with the Iowa caucuses.
Yeah, that's right. And this, of course, will be front and center when Congress gets back as well. Well, in the face of multiple calls for him to drop out of the presidential race, Chris Christie does not sound like somebody who is going to do that. Not at all.
If the polls were right, Hillary Clinton would be in her second term. Yeah. Right? I mean, so polls these days, I think, are even more problematic because, who wants to answer a pollster?
It also says Trump would lose to President Biden, and that Nikki Haley hasn't said that she would not run with Trump as vice president. Global news 24 hours a day and whenever you want it with Bloomberg News Now in San Francisco. I'm Ed Baxter. This is Bloomberg.
Daybreak Asia, we're 11 minutes past the hour as we take a closer look at today's release of the Fed minutes from the last meeting with Bloomberg's Steve Matthews, our economics reporter who joins us from our bureau in Atlanta. Steve, always a pleasure. Was there anything surprising, anything that you learned in reviewing these minutes that we didn't know after the statement was released in the December meeting?
Yeah, I would say there is. I mean, this is kind of repositioning where the FOMC was. After 3 weeks ago when Fed Chair Powell spoke to the press, he was viewed as being very dovish. I mean, he talked about there being the committee discussed, rate cuts, and a number of people on Wall Street took that to mean, well, if they're discussing rate cuts now, that must mean they're looking at it in the fairly near term, and maybe March. And the markets have moved to putting March as in play, with the likelihood of cuts in. And these set of minutes basically throw a lot of cold water on the idea of March. It says that rather than March, it says that the committee agrees that there will likely be rate cuts by the end of the year. December is the end of the year. That's a lot longer than people are looking for. And it notes that the participants, basically the entire committee, agrees that there are scenarios which would require more increases, not, cuts, but actually increases, and plural. They use the word increases. And then finally, they say that several of the committee thinks that rates could have to be higher for longer than that previously anticipated. So basically, the entire discussion of what's going to happen with the rates came across with a very hawkish wording compared to where the markets are right now, and also compared to where Chair Powell was speaking just 3 weeks ago.
Perhaps compared to where Chair Powell or what Chair Powell was saying, but, he's just one member of the Fed board, and it is a board, and the minutes were pretty consistent with what some of the other Fed speakers have been saying, but the market just seems to keep hearing what it wants to, right?
Well, I mean, yes and no. I mean, it is true that since Powell's press conference, a number of committee members have kind of pushed back against that narrative and have suggested they're not anywhere close to looking at rate cuts. Although it would be wrong to dismiss Chair Powell as just one member of the committee. The way the Fed operates, the one member of the committee controls the committee. I mean, there are rarely dissents, and he operates with consensus, but it's very much a chair led committee. I mean, it's dominated by the chair. It's really unusual that there's any kind of rebellion against the chair's views.
Steve, I want to broaden the conversation, if we can, to go beyond the committee itself, because there's the Fed staff to consider in this, and I guess they reviewed the financial sector. And a warning here that kind of struck me, given the large volume of commercial mortgage-backed securities coming due in the next few quarters, delinquencies would likely surge again. And I'm wondering, to go back to the committee, whether some Fed officials are going to take note of the fact that it's possible that there could be a lot of tension created in credit markets if rates do remain elevated at a time when a lot of this debt has to be rolled over. And they may be, when I say they, I'm talking about policymakers on the committee, they may be inclined, if they're comfortable with the trajectory of inflation, to try to get to a more accommodative policy sooner rather than later. Is that kind of reasonable to read into that a bit?
There has been concern about commercial real estate, and people have been talking about this for really more than a year now. And but from the committee's standpoint, their view has been that what's happening with CRE is pretty limited. I mean, today, for example, we heard the head of the Richmond Fed, Tom Barkin, talk about CRE, and what he said was, it's kind of there are issues with offices, and there are issues with offices in downtown areas, but that's like a very small part of the entire real estate market. And also, there may be issues for investors that hold commercial real estate, and for banks that hold real estate that is problematic, but it's not clear that any of this raises systemic issues. And we had 3 bank failures in March last year, and including a couple of sizable ones. And the committee went ahead and raised rates that month anyway. So it's pretty clear that they are trying to separate monetary policy and regulatory policy, and they view what's happening with real estate and particularly with the banking industry and the non-banks as well. It's kind of a separate issue that has to be managed separately.
Well, we heard from the IMF yesterday saying that the Fed's definitely securing a soft landing, but you mentioned Thomas Barkin there. He's not so sure. Why the disconnect?
Yeah, I mean, he laid out, and I was in Raleigh earlier today, and he laid out a bunch of scenarios for things that could happen. That we could have some kind of shock. We could have a hard landing. We could have consumers could run into a wall, and having spent their COVID savings, basically cut back in a cliff effect. I mean, he raised a bunch of different scenarios other than, the ideal soft landing. And what he was emphasizing was not that he disagreed with the soft landing, but that there's a lot of uncertainty about it, and you just have to watch the data as it comes.
Yeah, and to that point, Barkin said, buckle up. That's the proper safety protocol, even if you do expect a soft landing. Steve, thanks for being with us. Steve Matthews, Bloomberg's economics reporter, joining us here on Daybreak Asia. This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street. Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast. You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco. Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.